Hey everyone. Probably get started right now. Just wanted to introduce myself. First and foremost, I do hope you, your families, your loved ones are staying safe and healthy during these unprecedented times with the pandemic, and hopefully everyone is doing well. I'm Zoe. I'm on the economics team for Cox. And if you're not familiar with Cox Automotive is part of Cox Enterprises, and you might have heard of our sister company, Cox Communications. Cox Automotive is a family of 25 companies right now that all operate in the automotive landscape. Some of the companies you might have heard of, such as Auto Trader, Kelley Blue Book, Mannheim Auctions, and then of course there's a lot of other companies out there that support the manufacturers, the dealers, lenders. So across all of the companies, we have a pretty good view of what's happening in the auto industry, from pretty much when a car rolls off the lot and pretty much up to the point that car is salvaged. So where I come in, where my team comes in, is that we try to look at everything that's happening in the industry, and we look at it two ways. First, of course, is the top-down view. We look at what's happening in the economy that's going to have an impact on the auto industry specifically. And for an example, trade and tariffs that have been recently in the news have an impact, of course, on auto production. And then on the opposite end, we look at what's happening in the industry that could have a broader impact to the economy. The U.S. economy is consumption-based, and vehicles, in aggregate, when you add up all of the prices and transaction prices of new and used vehicles, it's over $1 trillion of transactions that happen each year. So it drives a lot of overall economic growth in the country as well when it comes to the auto industry as a whole, especially on the retail side. So today's session, I'm here to talk kind of about what's been happening with the pandemic, what's been happening in the industry, of course, what's been happening in the economy, and some of the ways we've had to really leverage data to really understand what's been happening in the market in real time, because the economic situation has been so fluid, and the auto industry, the developments there have been so fluid. It's been important for us to monitor, not just even daily at this point, but what's happening every hour, it feels like, because it feels like something's new, something's changing, right? So, of course, first and foremost, it's tough to talk about anything that's been happening because of COVID without mentioning COVID and what's been happening with the pandemic. So this is a view we created here at Cox to look at really granular views of what's been happening with the virus spread, both at a county level and a national level as well. One thing about this pandemic is that even though it's a global pandemic in the U.S., it's definitely impacting the country. It's been very different, market by market, state by state, even city by city. So instead of the U.S. experiencing one just big pandemic, in fact, it's been hundreds and thousands of small pandemics around the country that different markets and different regions have had to respond to. So when we think about the pandemic, one way we look at it is, where are cases increasing, where are they decreasing? What does that mean for you, for that area or that county within its own state? And then what about that county when it comes to the national view as well? Because not just with the pandemic, but a lot of things, including the auto market, there are geographic differences. There are differences in terms of what's happening in one market, what's happening in a different market. So for us, it was very important that we looked at everything as granular as we could on a geographic basis to really help us understand how the auto industry is going to recover and how it's going to navigate the uncertainty when it comes to the pandemic. Another thing that we were looking at, and that's crucial to the auto industry, of course, is the labor market and employment. And here also, we looked at things on a state level, at least, because again, the way the virus has impacted the country, and then the recovery phase and the reopenings have all been different state by state. So it was important for us to really understand, even then from a labor market perspective, how are things changed, how are things different, and what's happening now. So this is data, of course, from the Department of Labor, which gets published, and this is weekly claims data, which comes out, of course, every week. They updated the data this morning. Unfortunately, this slide is from last week, so it's just 1 week dated, but a very similar story where there's differences in the labor market recovery. And so what that means for the auto industry is that certain states, certain areas are still going to have to navigate different levels of economic uncertainty for the rest of this year and into 2021. States, when you look at what these two maps are showing is the number of people filing for continuing claims or pandemic unemployment assistance as a share of February's total jobs per state. So on the left-hand side, it's the continuing claim aggregate number, and then on the right-hand side is specifically to the pandemic unemployment assistance, again, as a share of February jobs. And so you can see here, states like California, the Northeast region, even here in the South where I am, Georgia, have had high levels of job loss or labor market disruption from a pre-pandemic standpoint. And of course, it's crucial for us to monitor this because it helps us then really frame up what's happening in these respective states so we can provide good guidance to the states, to the dealers in those particular states, and so they can help frame up their strategy in this recovery and then kind of think about their planning for 2021 and even beyond. And then, of course, another regional map is we look at business activity. So this is data that we've been tracking and monitoring. It's done with Moody's and CNN Business. It's a metric, and it's pretty much looking at business activity, and we're kind of equating or referencing it to pre-COVID levels. So right now we're kind of still in that recovery phase, but the growth rate in that recovery seems to have slowed down when you think about aggregate business recovery, because again, we are still navigating a pandemic. We are still navigating a recession. There's still a lot of challenges from both a health and an economic standpoint that this country is facing. And it's different state by state in terms of how things are progressing to a pre-pandemic level when it comes to spending and to business activity. But we're still about 20% low. We've kind of come back to and gotten up to 80% recovery when we look at this business recovery estimate, but we still have a way to go before we truly do get back to that pre-pandemic level. So the good news, right, it's that we have seen a recovery, but we are still, like I said, navigating a lot of uncertainty still. And of course, a lot of the uncertainty, a lot of the challenges impacts consumer sentiment. Consumer sentiment, as you can see here, really decreased at the start of the crisis, especially right when the lockdowns were happening around the country. There was a lot of uncertainty, right, with the virus itself, with the spread of the virus, and then of course the business shutdowns led to uncertainty on the labor side, on the income side as well. We have seen consumer sentiment come back a little bit, right? It's no longer at the lows it was back in April, but we still are lower than we were pre-pandemic, and we're down about 20%. Very, very similar to the business activity tracker that I just looked at from the prior slide. So consumer sentiment recovered, but still has a little ways to go before things do, before we get back to that pre-pandemic level. And of course, with Q4, there's still a lot of uncertainty, right? Depending on where you are in the country, cases still continue to be increasing. There's still concerns about the economy. There's a lot of concerns and uncertainty right now with stimulus. And of course, that we are in a highly contested election cycle. So this is probably going to continue to be down on a year-over-year basis when you think about what's just everything that's consumers are having to focus on to finish off 2020. But of course, as I mentioned, we like to look at things on a regional basis or a market basis if we can. So we're also looking at consumer sentiment from Morning Consult on a Metro basis or a DMA basis. And you can see here on the left-hand side, since February, markets have recovered, right? We're not seeing the deep red, the severely impacted markets where consumer sentiment is still at its peak crisis lows, but we're still down, right? As you saw in the aggregate numbers in the slide prior, we're still down on a year-over-year basis. But on the right-hand side, when you compare it on a week-over-week basis, you do see the green, right? You see the markets that continue to see improvements on a week-over-week basis, primarily in the Midwest and the Great Plains, but even in the Pacific Northwest, we have seen markets turn green, and the green means, of course, improvements on a week-over-week basis when it comes to consumer sentiment measured by Morning Consult. So as you can see here, just through the slides that I've shared so far, looking at the at major economic things that we looked at, it's a lot of data already, and there's still a lot of data that we're looking at that's going to be auto specific, including our daily, weekly estimates of what's happening in the retail market. We're able to look at this data using DealerTrack. DealerTrack supports the dealerships when it comes to facilitating a lot of the finance stuff, including credit app data. So if you ever bought a vehicle, and you're trying to get credit, the dealer then, of course, finds ways for you to get credit if you're financing through the dealership. And one way to do that is by creating a credit app, in which case that your profile goes and you get funding that way. So we're able to look in real time through our DealerTrack platform using credit app data or approved credit apps. So done transactions apparently that activity has recovered. We're no longer seeing credit app activity as a proxy for sales at their year-over-year low declines that we saw in early parts of April. We have seen steady recovery. The recovery seems to have stalled a little bit, right? Because there are challenges to the labor market. There's challenges to the economy. There's a lot of things that are still uncertain. But again, recovering retail market, when you think about both the new and the used vehicle market, especially off of the lows that we saw back in April. So an improving trend. We'll see what the rest of this year does. We're pretty much guaranteed going to see both new and used vehicle sales come down on a year-over-year basis. We're not probably going to see the same numbers in total when you think about the used vehicle market and the new vehicle market hitting their 2019 numbers. So we are fully expecting a decline on a year-over-year basis for both of those markets. One thing to note, of course, is that the used vehicle market is less volatile than the new vehicle market. You can't see that in this chart, but in general, when you do look at the data on a monthly and yearly basis, in downturns, the used vehicle market falls less than the new vehicle market and recovers quicker than the new vehicle market, because the used vehicle market is 2.5 times the size of the new vehicle market here in the US. So you have a lot of more supply to support consumers that are shopping for a vehicle. And of course, the used vehicle market is priced lower than the new vehicle market. So consumers that are facing challenges can find transportation should they need it in the used vehicle market if there is concerns that they can't afford the new vehicle. So kind of just to highlight what's been happening in the new vehicle market, Tesla gets a lot of attention, and rightfully so when you think about how they've been performing this year. Brands like Kia, Hyundai, Tesla, Chevy have seen their share increase. There's products that consumers want from Hyundai, Kia. There's the SUVs, there's the cars. There's slightly, in a more, I would say, attractive price point than the luxury manufacturers would be in a recession. But even then, right, Tesla's doing well. The Model 3 has been a huge success for them when it comes to volume. They're growing their share, as you can see here this year, compared to some of the other manufacturers that have seen their share decrease, as you can see on the right-hand side. What's interesting, of course, is when you look at share gain and improvements there, pickup trucks have seen their share gain pretty strongly. Consumers love pickup trucks here in the U.S. The light truck market in general, which includes SUVs and CUVs, still remains to be on fire when you compare it to how cars are performing. So the new vehicle market is pretty much a light truck market. Consumers love SUVs, CUVs, pickup trucks, and those vehicles segments continue to see improvements. While car segments do see some level of challenges. And like I said, we love looking at things on a market basis. This is looking at sales activity proxied with credit app data on a market basis. So as you can see here, at the peak of the crisis, when things were shut down and consumers really weren't able to transact because dealerships were closed and people were staying at home, there was a lot. There wasn't a lot of activity happening in the retail market, right? You can see here in April, in the early parts of April on the left, you had some severely impacted markets where sales were down over 60% on a year-over-year basis. But in general, markets were down 30, 40, 50% because of business closures, because of economic uncertainty, and because consumers were staying at home, sheltering in place. But as states have opened, as markets have opened, you've seen that the retail market has improved, and it's improved differently in different parts of the country, of course. But this is data as of last week, and you can kind of see, there's a lot more green happening in the market, around the country in various markets where sales activity is either flat, if not even up on a year-over-year basis, depending on the market you're in, because there's been pent-up demand. The stimulus check, of course, supported the vehicle market. The shutdowns, like I said, with pent-up demand, boosted demand to the summer versus having it in the spring when people couldn't transact. So a lot of different things at play right now, different state by state, market by market, county by county. But one thing to kind of just emphasize is that as things do recover, we can't lose sight of the fact that there are still some challenges out there from both, again, the health concerns because of the pandemic, and of course economic concerns because of the pandemic and the recession that we're still navigating as a country in aggregate, and of course we're navigating differently on a state by state basis as well. So there's still a lot of uncertainty out there, but we are recovering. So we aren't near the lows, at least in the auto industry and even the economy, that we were just a couple of months ago, which is a good sign, good news. But we'll see how the rest of this year goes. We'll see if we do get another stimulus soon, whether it's sometime this year and next year, to help out all of the households and the businesses that have been impacted because of the recession, because of the virus. So this is just a sample of the things that we're looking at. Like I said, not just even daily but hourly at this point, trying to understand what's happening in the market so we can help the business, our clients, clients, and the industry in general navigate the challenges that we are still seeing and facing. But again, emphasis that we aren't at the lows anymore, but we are in a recovery phase, and so we'll continue to be recovering. So I think that brings me close to time. Let me just double check if I have questions. I don't have any questions. So kind of just I shared the economic data points that we look at, the auto market data points that we look at. What other points do we look at that's important for us is, of course, what's happening from a fiscal and monetary standpoint. So we look at interest rates, we look at the stock market, we look at business activity, whether it's housing, whether it's consumption, credit card spending, for example, from households, and then we're definitely looking at what's happening with households, the labor situation, of course, which I showed earlier. So there's a lot of different data points that we're looking at from an economic standpoint, even from a auto standpoint. We are looking at sales, we're looking at transactions, we're looking at prices, we're looking at interest rates on loans for both the new and used. To all of this to help us understand not just where we were as an industry and where we've come, but where we're headed. And like I said, this year we'll still see sales down, coming for both new and used down on a year-over-year basis. We expect a continuing recovery in 2021, barring any sort of unforeseen economic shock, of course. So that's it. That's it for me. Thank you so much. If you have any questions, though I don't see any, but other than that, thank you so much for attending my session today. Hope you have a great rest of your day, and hope you have a great weekend. Take care. Thank you. Bye.